Well, let's take a look at some of our stories, but then let's go back to our business news as we do have our guest who's joining us this morning to take a look at the stock market, most especially the NGX review on a Monday morning. Looking forward to a brand new week. Well, joining us now is MD, Trustbanc Assets Management Limited, Azeez Lawal. Thanks for being here this morning.
Yeah, good morning. Thank you for having me.
All right, let's go straight into it. How was the performance of the NGX, particularly in March, since we are in a new month?
Yes, the performance we saw from the market in March was largely driven by profit takers. Since the turn of the year, the market has been positive, but we saw market players sell significantly in March, particularly as yields were rising in the fixed income market. Typically, what happens is that when fixed income, that is securities where you can fix your money to earn interest, the moment that market rates are going up in that market, uh, investors tend to leave the equity market to what we call safe haven to invest their money. Why take risk with your money in the equity market when you know you can get a higher interest as much as 10, 12, 13% in a market that you know is very stable. So that was also in March. Investors largely sold down their equity positions to enjoy fixed return in fixed income market. Thank you.
Hmm. All right, talking about investors there as well. Well, let's take one more question very quickly. I mean, NGX on Friday ended trading with 2.071 billion shares exchanged hands. What factors actually caused this movement?
The good thing for the market, even though we said March generally was driven by bearish performance, those selling down. But on Friday and 2 days before that, we saw investors returning to the market, particularly after Zenith Bank declared a dividend of 2.9 naira. So the performance we saw on Friday was driven by investors returning to the market to enjoy good dividend on their investment. Again, for both the fixed income movement and return to equity, they are both driven by investors running after return. If I also find out that the yield from equity market tends to be going higher, I return to the equity market. So the rush we saw by investors back to the equity market, particularly in the last 3 days of the month, was driven by higher yield and earning, particularly dividends. Thank you.
Thank you so much, Azeez Lawal, for talking to us here on News Now.